What's up, guys? Welcome to the multi-dimensional trading video series. This is video number 9, or part 9. And what we're going to get in today is we're going to go over the liquidity grab again, just so everybody understands how important this one method is in conjunction with pretty much everything else. So understanding, and I know I spoke about the liquidity grab on earlier videos, and we always go back to it, but understanding exactly how this mechanism works is the key and usually the beginning of the reversal, and then everything else like the break and retest or the 369-day EMA, all of that falls in place usually after the liquidity grab, right? The liquidity grab is usually the start of the reversal. It's the start of the run going the other way, okay? And you'll see it happening over and over on every time frame. But when you're scalping, like on the 3-minute, like we're on right now, you'll basically catch the run for the hour. You'll catch the run for it on the 15-minute using the smaller time frame as your reference point. So let's get into it. Right, this is a short video because we're really going over prior methods, but this is something that I really push because it's where the beginning of the reversal happens. Then after that, you're going to see your break and retest play out. You're going to see your 369-day EMA get hit. You're going to see those other things to take the trade from. But the beginning of the run, right, the lowest risk trade to take, in my opinion, is the liquidity grab, because you're getting in at the lowest point of the run, right? So putting a stop pretty close under the low is less risky than putting a stop under the low at a higher point, right? Because if it fell, then your stop loss would be larger. Okay, so let's go to this one that we're looking at right here in the very beginning here. Okay, I have it pointing right here, the liquidity grab. And remember what liquidity grab is. See how I got my trend line right here? I'm going to place it right at this low, on this very red candle, at the low of this low, okay, at the very low point, okay. Now, as price comes down, I'm looking for a poke below this low and a closed candle above it, above that low. That's what we're looking for. That is your signal. That is the liquidity grab signal. That is the signal that tells you it's time for a reversal. Okay. See how price came down on this candle, and then this one on the 3-minute chart closed above. See, it closed up here, green, which is above this line. So we know now the market is showing us his hand. Now we know to take the long position. We know to get into that trade. That's how that works. We have a high probability of taking a winning trade after this signal, after this close above that low creates that signal to buy. Okay, so we had that close above, and then what do we have? A retest down right to the low, right on that line to that very low, and then that's where we enter. Click, stop loss at the low, enter. Okay, now what do we have here? We had a break above and then a retest of the level and then take off. So if you missed this entry, you can see that you had a liquidity grab here, and then you could see you would have had the break and retest right here. Okay, you have the break above the level and then a retest back to it. Enter here as well, stop below the low, continuation. Okay, that's how that goes. So if you didn't grab the first hook over here, the first retest here, You had the second one here. But you're going to see it after you see the liquidity graph. So what comes first? What is the first thing that you're going to be looking for on that chart to know that the price is ready to reverse? You're going to be looking for that liquidity grab. In some form or fashion, you're going to get a poke below the low, right? Or a group of lows, doesn't matter, and then a close above them. And then it retraces back down, usually. But even if it didn't, you would know what side of the market you're on. Okay? And then usually that break and retest comes after this. So we get that break up, retest the level. That's our second entry. So if we missed it back in the day, I used to say, dang it, I missed this snatch at the low. Then I would just wait for it to come back down again. But now I understand that you can just take the break and retest of the level and continue with the trend, right? That's all we have to do. So the liquidity grab comes first. It's usually the first step of the market reversing, of price reversing. So that's what I'm pushing now. It's like, look for that first, and then you're going to get your retest. You're going to get your break. You're going to get your retest. Then those are the entries. Okay. You don't want to just enter because it came down below a low. What we're looking for is an entry after it breaks this low, but then quickly rejects and closes above the line in any form or fashion. If we go down to the 2 minute, you'll see how clean it closed above the line. Just that first candle, we put this green line right at the very low, that it broke. You see that it came below, and on the 2 minute candle, it closed right here above it. That was the signal. Then go down to the 1 minute, show you how detailed this is. Okay, we had this the low right here. We came below it, and then we got this second candle, the close above it. Then we knew, all right, let's go. And then retest at that very level, same level, take off. Retest, take off. Okay, it's that simple. Okay, let's go to another plot on the chart. Go back in time here. Same, I'll take my liquidity grab text here. You guys can see it right there. Same exact thing. Okay, this happens over and over. I'm using this 3 minute time frame because it really does cover hours, right? If I'm here at 8 o'clock, like it says 2003, and the run is all the way over here at the high at 12 o'clock, that's 4 hours. These 3 minute candles equates from 8 o'clock on this down red bar right here, all the way to the high up here at 12:39. Okay, so that's that's a little bit over 4 hours of time right there. So you had literally 4 hours of knowing how the market should behave, or what the high probability of how the market should behave, right? What's the chances of what it would do? You had that for 4 straight hours. So I'm just saying, looking at the smaller time frame makes sense because you're able to see it in detail and catch those details that maybe someone looking at a larger time frame may not be able to catch. We'll check the larger time frame to see if we're still going with the trend, but that smaller time frame is what we'll be able to catch those little details like the liquidity grab. Right? You might not be able to see it so detailed if you choose the 15 minute or the 1 hour chart. That's all I'm saying. You use them still to make sure you're going in line with the trend as extra confluence, but we go down to that small time frame to see those details and get those really close to the lows or close to the high entries. Okay, so here we are on this one. If we put our green line perfectly at this low, we're looking for the break of this low and a clean rejection and a close above it. What do we get? We got a spike below the low. and then this candle closed. Okay, we wouldn't have entered here. Why? Because this candle did not close above the green line, did not close above the low. This candle did. That was our signal. Okay, you could have got in, load it up, or wait for the retest of that same level. See that? It came back down and tested that level and then took off. That's an entry. That's a stop right there next to your entry. Very close, really small risk. Lots of upside. Okay. Came back down right into that order block area, that bullish area. Came and then took off again. Okay. Came down, look at that, to that bullish order block, and then took off again. But the start of all of that, the bullish order block, the break and retest, was the liquidity grab. That was the start of the reversal. Okay? This is what I'm saying. I'm saying it starts with the liquidity grab, and then the break and retest come. And then your bullish order blocks get formed, and then you can play off of those, right? And then the break up above highs and retests come. Those methods are very valuable, but where does the reversal usually start? At the liquidity grab. So pay attention for those, because then after that you can see, okay, we know what direction we're in because the liquidity has had a grab, right? We had that fake out, is what other traders might call it, and now we know we can get in with that trend. Okay, we wouldn't start looking for shorts because we just seen a liquidity grab for the upside. And lo and behold, it started here and it never came back, right, for 4 hours. We were trending up. Higher lows, right? Higher highs, higher lows, trending to the upside. Right? Now you know that you're on that side. So then when you see this bullish order block, it's like, ooh, cool, let me get in. I know what side of the market I'm on. You see this pullback, it's like, ooh, cool, let me get in. I know what side of the market I'm on. Okay? When you see this pullback at the highs, you're like, ooh, cool, I know what side of the market I'm on. Okay? That's all I'm saying, guys. Look for the liquidity graph first, and then those pullbacks, the bullish order blocks, all of the equals, right? Because that's really what this is for me, is equal lows. When I see a low here, we had that break below, then we had another low lining up. It's basically equal lows for me, and I'm getting in at the equals, right? Which is really just the pullback to the level that was previously broken. Right? And then we have this bullish order block, and we have a pull back to the bullish order block, and then it takes off, right? These are the methods that happen over and over, so you know what you're looking at, you know how to respond to them. And I like showing these because these examples are all over the chart all day long, all night long. Okay, 24 hours a day, especially when you're doing perpetual futures on something like Trump coin, like we're looking at right now. Okay, same concept here, right? They had a low here. Okay, it doesn't matter how it looks, it's the concept that it broke it and closed above it. That's the point. Now we're not talking about the break and retest when it comes to the liquidity grab, right? Because the break and retest, like I've shown in other videos, would have looked different. This would have kept coming down, and then it came back up, and then we would have took for shorts. But we got a break below and a close above. Okay? That's the difference. Look at this one, right? It had a low. It's a consolidation. We broke below that low, but we closed, the candle closed above it. And then what happened? We went this way. We went north. It's almost a clear sign. It's a clear signal that the trend, the chart, the price is reversing. Clear signal. Don't go against it. If you don't have confidence to take that trade, it's not, don't feel right, then just don't take it. But don't go against it. Don't go against that trade and say, you know what, I'm going to short because that's what I feel like doing. No, stay objective and look at it and say, well, it did break the low. It didn't flush and close below the low. It closed above it. So I'm either going to take the long, I'm going to stay out. Okay, if this was short, it'd be the same thing. Okay, I have my chart inverted here, guys. So if this was short, it'd be the same concept. We had a break above it, and then it came back down and closed below the high, right? That would be a high technically, and then went the other way. Okay, same concept. Break above, came back down and closed below, right? On this one, let me move this line right now, right here on this one. Break above, but came back down and closed below. Retraced. Market showed us his hand when it closed below. Retraced and then take it. That's the liquidity grab, guys. Short side, long side is the same story. Okay? Same exact story. This has been video number 9 or part 9. I will do part 10, which is our finale video. And I will do that soon. I will see you guys in the next one. Practice paper trade, like, and subscribe to the videos. I will see you guys in the next one. Peace.